Hello, welcome to this short session today. We're talking about test question analysis. And I'm going to work out a property tax problem and kind of show you the technique I use when it comes to calculating this type of calculation called property tax, okay? So my name is John Enzing. I'm a licensed real estate instructor in Louisiana and Florida. My specialty is to do one-on-one tutoring, private tutoring with you, the student, to help prep for the state exam, okay? Non-credited hours, but just nothing more than to get you, build your confidence, mentor you in, clean up any areas you have any questions about in a private tutoring session. You can go to privateturingsession.com, privateturingsession.com, and schedule an appointment, or just email me at john.enzing@gmail.com. Okay, let's dive on into this. All right, so we're going to talk about property tax in this real estate calculation. Now, here's the question I put up. So a home has a fair market value of $300,000. The assessed rate is 10%, assigned by the tax assessor. If the tax rate is 35 mills, what is the annual property tax? Okay, so first thing we want to do, we want to have some rules of thumb or rules to know when it comes to property tax, okay? So first of all, let's understand what the theory behind property tax is. So what's property tax used for? Well, it's calculated and used by the parish and city to go ahead and pay for the budget they have annually, okay? For example, we got to pay for police departments, fire departments, public schools, roads, maintenance, sewer lines in the city. All these items that need to be expensed in a budget have to be paid somehow. That comes from property tax, from residential to commercial to industrial. Anybody that owns property, even raw land, anybody that owns property, they have to pay property tax. So it's used to pay for the budget for the city. Now, in calculating the property tax, first thing you have to do is you've got to calculate the assessed value. So the formula for the assessed value is fair market value. I've got FMV down, that's what it stands for, fair market value, times the assessed rate. Remember, the assessed rate was assigned by the tax assessor at 10%. That gives me the assessed value. So I've got $300,000 times 10% or 0.10. I got 30,000 is my assessed value. Then I've got to convert the mills, okay? So the way you look at mills, the value of mills, or how it's defined, is 1/1000th of a dollar, or 0.001. That's 1 mil. 2 mills, 0.002. 3 mills, 0.003, and so on. Now, all you have to do is just divide the mills by 1,000, and you'll convert it to the decimal you need, okay? So, for example, the problem says we have 35 mills. I'm going to divide it by 1,000. I get 0.035. Then my last is going to be calculating the tax, which is I'm going to take my assessed value that I calculated earlier times the amount of mills. So that's $30,000 times, $30,000 times 30 mills, 35 mills, or 0.035. All I did was take 35 divided by 1,000, and I get 0.035. And that gives me $1,050. $1,050. So we're talking about answer B. Answer B. So listen, property tax, very easy problem to work out, but you got some steps. You got to figure out what the assessed value is. That's the assessed rate times fair market value. You got to convert your mills, and then your mills times your assessed value will give you your property tax. Okay. Hey, listen, I hope you enjoyed this short session on property tax. Again, if you need some help, all you have to do is go to privateturingsession.com, privateturingsession.com. Book an appointment. Again, one-on-one. I'll prep you for the test, any questions you have, and much more that we can cover. Okay? Listen, good luck on your tests. Best wishes in your career. If you need some help, look forward to seeing you. Bye-bye now.